Hey guys, Sean here. Oh boy, do I have crazy news for you. What's the first thing you think about when I say the word bank? Most probably a nice financial institution, trustworthy folks, people who will take your money, they'll give you interest on it, and when the time comes, you'll be able to withdraw your funds, right? Oh no, not this bank. Chinese depositors left in the dark as three local banks freeze deposits. What? They've taken my money. Wait. This isn't right. Let me read on. So, Shanghai, May the 18th, right? Three banks in China's central Henan province has frozen at least $178 million of deposits, offering scant information on why or for how long, right? Leaving firms unable to pay workers and individuals locked out of savings. Now, this is the most scary part of this story, offering scant information of why or for how long. That means essentially you do not know why your money is being frozen. Is it something to do with you, or is it something to do with the bank, right? Has the bank somehow mismanaged their funds? Has there been embezzlement going on inside? Or am I the one in trouble, right? For example, have I broken the law? Have I done something wrong? Have I done an illegitimate transaction that requires my funds to be frozen? No one knows, and that's the big problem over here. Reading on, we can see that Yizhou Xinmingshan Village Bank, probably butchered the names by now, and two other banks froze all deposits on April the 18th, with all three telling customers they were upgrading internal systems. The banks have not issued any communication on the matter since, depositors said. So this is the thing, right? When your money is within the financial system, you really do not know what's really going on over there. And when the time comes for you to pull out money from the bank, maybe you want to do a transfer to your family or your friends, or you want to fund some business expense, suddenly you can't, and they'll hit you with some crazy banks upgrading issue. Now this will really leave anyone very pissed off. But the most frightening thing is that this isn't some institution freezing another big institution's money, or a country freezing another country's money, like what we have seen with the United States freezing Russia's foreign reserves. This is a bank freezing the little people's money without any explanation at all. And this is something that's really very frightening that we should pay attention to. Now let's dive a little deeper into the impact frozen funds can have, because it's really devastating for the average person, right? Doesn't matter if you're individual, doesn't matter if you're a business owner, it can just tear your whole life apart. So we can see that Jerry Chang, owner of a factory in Hubei province, cannot access his over 6 million yuan. That's a 1 million American dollars more or less deposited at the bank. Not being able to withdraw money has a huge impact on the operation of our factory, including procurement and workers' wages, said Chang, who used the bank because of its marginally higher interest rate of 1.85%. Now 1.85%, we all know is nothing, right? Definitely doesn't beat inflation that's going on around the world, even in China as well. But here's the thing about putting your money to banks that are promising above average interest rates, because you do not know what's really going on behind the bank. How are they actually structured to give you this kind of high interest rates? Are they taking risks? Are they taking your money and speculating it in stocks, speculating in commodities? Are they playing the market? You really do not know. There's always a reason why a bank is able to give you higher interest rates compared to the competition. And this is something that you really need to investigate more for yourself before you just commit and lock your funds up in a bank that pays you more interest rates, right? But let's continue. So Tony Qian, an investment consultant from Zhejiang province, cannot access the 20 million yuan he put in Yizhou Minsheng Village Bank that he has been saving to buy a property, right? So we are talking about maybe 2 to 3 million United States dollars, US dollars. The thing I'm most angry about is no one has explained anything to us, and that's really heartbreaking, guys. Just imagine all the money that you have saved up, you want to buy a property, you put it in a bank, and when it comes time for you to access it, you really can't. And this is the problem with money that's been locked up in the financial institutions, in the systems. I believe that most banks are fine, but there can always be a black swan event that your money can't be accessed, right? And we're going to dive deeper into this topic of why you need to diversify your money out of a financial system. For sure, there are some people who advocate taking every single dollar out of financial system, and I really can't blame them, right? But realistically, we cannot escape the entire system. We cannot escape the banking system as much as we want to, right? All our money is connected with every single account that we have, our credit card, our brokerage account. It's all connected to our banks. So our mortgage, our expenditure, our bills, everything's interconnected. And honestly, we cannot escape it at all, but we must take steps to diversify. And this is what the heart of this video is actually about, right? Now, a lot of things can really go wrong, especially when we move to a recession. Remember, a recession is not just a time where business becomes slow. A lot of the institutions that's going to be hit the hardest are banks. Because I think we all know how banks actually make the bulk of their money, right? It's taking your deposits and then loaning it out fractionally, reserving part of the deposits and then lending it out in multiple times, right? Let's say you deposit $1,000 into the banking system. They just need to reserve like $100 and then they can loan out maybe $900 or the full $1,000 amount. So this is how banks actually make their money. So just imagine if we go into a prolonged or protracted recession, banks suddenly cannot make enough loans to actually satisfy their obligations, their liabilities, such as the salaries they pay people. And this is why banks can actually get into a lot of trouble during a recession, right? Maybe they make wrong bets, especially during this period right now where the markets are all going down. Maybe some of the banks out there are long. Maybe they are long the S&P 500. Maybe they are long the stock market. Maybe they are long tech stocks, right? Some of the traders maybe have lost their minds. They have long tech stocks and right now they are in a world of hurt. So we really do not know how exposed the banks are, how much negative exposure they have, and how fragile they might be, right? Just remember Lehman Brothers, just remember a lot of the commercial as well as the investment banks back in '08. Before all the crisis happened, they all said everything was all fine and dandy, right? They had strong balance sheets. They believed that they could cut away all their negative assets when the time came. What happened, right? What happened in '08? We saw all the bailouts going on. The American government decided to print out lots of money, hundreds of billions of dollars, and decided to helicopter drop all the money to all the banks out there. Now, if a bailout does happen, then you and me, our money will be fine, right? The banks will just simply print out tons of money, they'll ship it out to the banks will be flooded with liquidity, and then they can start paying out the deposits when we come to claim them. But what if that doesn't happen? What if the government decides to do the most responsible thing? Central banks decide not to print money. Now, a bail-in can happen, and if you're not sure what a bail-in is, it's basically the bank can take your money, take the depositors' money to satisfy their obligations, right? Remember, your deposit is technically a liability in the bank because it just sits there. They need to guard your money and they have to pay interest to your deposit, right? Even though the interest rates are very pathetic today, they still need to pay money to you, and that's considered a liability. Now, can a bail-in happen? Well, it can, right? We just need to look back in history. In Europe, I think 2012 or 2013, the Bank of Cyprus actually did take their depositors' money, and in exchange, it gave the depositors shares in the bank. But here's the funny thing, the shares in the bank will never, ever, at least at that point of time, match the value of the deposits. And that's because if a bank is failing, if it comes to the point that a bank needs to resort to a bail-in, how much do you think those shares are actually worth, right? Even if they give you the share today and it matches dollar for dollar with your deposit, over the next few weeks, over the next months, or even next year, more or less, I can guarantee you that the price of the shares will go down, right? No one in their right mind will actually want to invest in that bank, at least for the short term. And that's not all, guys. You know, right now there's a lot of phishing scams going on, all these Nigerian prince just coming out from the woodworks, especially when the recession's about to hit. Everyone is getting tight in their pockets. They want to really go for the holy grail. They believe that they just need to reply to an email to a so-called royalty in Nigeria and they can get $3 million from the dead relative. You know, all these kind of things could happen. And when you give all these hackers or all these scammers access to your bank accounts, like what happened over the past few years in many various cases from America all the way to Singapore, you know, you can kiss your money goodbye, and it's going to be hell trying to get your funds back from the bank, right? And it's neither the bank's fault as well. At that point of time, you have to take personal responsibility, but here's the big problem. Because your money is within the financial system, it's going to be very hard for you to get it back, especially if the fault lies on you. And this is why I'm a very big advocate of diversifying your assets outside of the system, right? You know, putting all your money in cash and letting it sit in a bank is not really ideal, guys. We all know that inflation is going to eat up our purchasing power, right? It's not 5%, it's not even 8.3% as what the official numbers are. Personally, to me, I double the number whatever any official figure is given. So to me, the official inflation rate today is 16.6%. Yes, that's Sean Fu's inflation rate. Now, when I'm talking about diversification, I'm not just talking about stocks, right? I'm not just talking about equities. You can diversify to there as well, but that is also being held most likely by a custodian, and that custodian, chances are, is most probably linked to the financial system as well. And there are many banks who are custodians as well. So here's the thing. You need to get your money into real hard assets. And I'm talking about gold, I'm talking about silver, and I'm talking about real estate as well. Farmland to a smaller degree. Because when you have physical wealth with you, right? When you have maybe this gold bar over here, it's totally in your control. It's within reach. You can take it, and it has the broadest base of value of buyers and sellers out there. I can just take this, I can go to a pawn shop, I can go to a jewelry store, I can sell it to a third person, or I can sell it back to a dealer, and I can get my money immediately, right? Yes, granted, depending on how you actually buy your gold and silver, there's a premium of anywhere at least from 3 to 5% when it comes to gold. But that's the amount of money that you need to fork out in order to secure your financial wealth, right? Instead of just having it all laid out in a financial system. And I know even after I come out with this message, a lot of you guys will not want to diversify. You still want to stay in cash and leave it in the banks. Now, if that's the case, I'm not going to force you, but you do need to understand that there are limits in the bank that you are secured up to, right? There's a certain dollar amount that you can so-called comfortably leave in your bank, and anything above that are subject to bail-ins. The bank can essentially take any money that's above that limit and use it for their own purposes if it comes to really a big crisis, right? So for America, there's this thing called the FDIC law, which actually protects your money up to $250,000 across every bank. Or is it in a single bank? I'm not so sure. But you definitely do not want more than $250,000 in a single bank. Anyways, we all know that's quite foolish, right? Inflation is going to eat you up. In Singapore, it's $75,000 that you don't really want to place more than that amount in a single bank, right? And if you do place it more in that bank, maybe they decide to offer you quite a bit more interest rates, or maybe your credit card rewards are tied to that. You got to be prepared for a possible bail-in if the entire financial system collapses. And right now, we are moving to quite a bit of a deflationary spiral. We can see a lot of equities actually going down in price, and a lot of banks could get into trouble down the road. Now, I want to take a bit of a detour and talk about Bitcoin. A lot of people are saying that, why don't I just take my money out of the bank and diversify it all into Bitcoin? Firstly, that's not diversification. You put all your money into cryptos, that's silly. Just take a look at all the big crashes going on right now. Bitcoin is obviously not been proven to be a store of value, but let's just say that it is, right? Let's just suspend belief, and we say that Bitcoin is a good, stable store of value. Everything are stable coins right now. So if we are going down this argument, we got to understand that cryptocurrencies, at the end of the day, they can't be used everywhere. And that means you will need to cash them out and use fiat currencies, the currency of your country. Maybe it's dollars, maybe it's pesos, maybe it's yuan. Oh yeah, cryptos are banned in China anyway, right? And in that case, you'll still need to connect to a financial system. You'll still need to connect your cryptocurrency to a bank, and that's how you cash them out. And here's the thing, we do not know what kind of laws are going to happen in the future. Maybe you try to cash out your cryptocurrencies from a bank and they halt the transaction, or maybe to freeze your funds. Who knows, right? A lot of things are going to happen down the road that we cannot ever imagine. Right now, everything seems to be fine and dandy, but this recent example of the Chinese banks that I just pulled out is showing that things can really spiral out of control, and you really do not know what is going on behind the curtain, right? Everything is a black box, especially when it comes to financial institutions. You're not working there, I'm not working there, we really won't know. But the most concerning thing of why we have to diversify our money out of the system is because CBDCs are coming, right? Now, if you don't know what CBDCs are, they are basically central bank digital currencies. They are like cryptocurrencies but issued by a bank, a central authority, by a central bank of a country, like the Fed coin, or maybe it's going to be the digital yuan, like what China is currently doing right now, and with quite a bit of a success, I would say. And when CBDCs comes out, right, this will put a lot of the authority not just on the commercial banks themselves, who are going to facilitate the transfer. Power is going to be given to the central banks, right? Now, there's a lot of pros and a lot of cons to CBDCs. Now, I'm going to talk about some of the cons, right? And I'm not going to dive deep into conspiracy theories. I'm just going to talk about the factual cons that can really happen when CBDCs are in control, right? So, when central banks are in 100% control of the local currency, especially when it's in digital form, your consumer behavior can be controlled. A lot of things can happen, like let's say negative interest rates could suddenly be imposed, and that means that you suddenly need to spend your money, or else the value of it will corrode away. Right now your money is already being corroded away by inflation, but just imagine if there's a negative interest rate slapped on top of it. Secondly, your funds could expire, and that's what's happening in China in their recent CBDC experiment. So basically, if I'm not wrong, they gave their population a bit of free money in a sense for them to experiment, to try this CBDC out, digital yuan, and if they don't spend it within a certain date, then the entire money is rendered worthless, right? And that really could happen. We really do not know what when it comes to digital money, right? So for example, let's say a future bailout happens in the year 2030, in the year 2040, and then they come out saying that if you do not spend this stimulus check, the steamy check that I just gave you within the next 60 to 90 days to stimulate the economy, maybe the value gets cut in half, right? Or maybe we want you to take this money and pump it into the stock market for you to enjoy the full value, or maybe you cannot use this money to spend for anything else other than your groceries, right? For you to buy food and water. And that is something that's definitely possible if CBDCs do come out. And that's not to mention the 100% non-transparency of your transactions anymore. You can basically, they can monitor everything that you buy, right? Whether it's buying a can of Coke at 7-Eleven, or if you're one of those crazies and use your money for OnlyFans subscriptions, they can definitely track it, right? If you're buying gold and silver, if you're buying a new car, they can find out where your money is going to, and there's nowhere to run. And the thing is that maybe it's not the bank's fault, right? Maybe it's not the central bank's fault, not the commercial bank's fault, and your funds somehow gets frozen, and it's some administrative mistake by some of the employee in the institutions, and you're deemed to be doing something wrong, and your money suddenly frozen, right? What happens then? You can't access it, right? And even if it's found out to be a genuine mistake, it could take 3 weeks, it could take a month, it could take 2 months for you to access your money. What happens then? Will you default on your deposit? Will you get into big financial trouble? Will you not be able to pay your employees? Will you have trouble feeding your family at that point of time? So this is something that we really need to take note of and begin diversifying out of our financial system. And I think this is one of the most perfect time to get into alternative assets during this period, right? I like to default to gold and silver because it is one of the most simple kinds of alternative wealth that you can buy today, which is technically still untrackable, right? You do a cash transaction today, other than just the dealer, or if you're doing it the third party, no one else knows. You can stack this money and actually protect your wealth outside of the banks. And when CBDCs do come out, I can more or less guarantee you that alternative wealth such as precious metals, the premiums there will go up. Suddenly there is a premium to holding money outside of the financial system, people will suddenly realize that gold and silver, there's something so-called magical to them suddenly, because they are physical. This money that's outside of the financial system, something that you can really hold, and we can expect higher premiums from dealers, from merchants. Maybe it's 1%, maybe it's 2%, maybe it's 5% higher, who knows. But this will be a form of safety, and if I'm the dealer myself, hell, I'm going to charge you more, because right now having precious metals or having other forms of financial assets, even cash outside of the system, will be more valuable, right? That means you're protected against finding things like sudden negative interest rates, and there won't be a time limit on how you get to use your money. So let me know what you think, guys. How important do you think diversifying your money outside of financial system is? Are you afraid of bail-ins? Do you think it's going to be more prevalent down the road? Do you think a bail-in is more disastrous than a bailout? Let me know in the comments below. Thank you all for watching. Be sure to smash the like button and subscribe if you enjoyed the video, and I'll see you soon.